It's Christmas time, everybody. Even in February, treasuries are at an all-time high, and in this video, we'll show you how to earn over 5% APY risk-free on your cash. We'll talk about what treasury bills are, how to buy them on Treasury Direct, and how to buy them via your favorite broker. We'll keep this video simple, so let's dive right in. For starters, the US has a lot of debt. They need money. So to raise capital, the government will sell treasuries and offer special perks to find investors. Treasury bills are one option where you can lend money to the US government in exchange for high interest rates and tax benefits. Namely, the interest you earn is exempt from both state and local taxes. And these two benefits make treasuries incredibly attractive. In fact, many high earners, companies, and even foreign governments will gobble up these T-bills to earn those high yields and special tax treatments. Best of all, these are fully backed by the US government. And because the US has always paid off their debt, T-bills are often considered a risk-free return and even better than FDIC insurance because there are no limits to how much you can purchase. It's also worth noting that treasury bills have maturities of 1 year or less. These are sold in 4, 8, 13, 17, 26, and 52-week durations. Longer-term treasuries tend to pay a bit more interest, but your money is locked up for a longer duration. 4-week treasury bills are great for short-term savings, while 52-week treasury bills are amazing alternatives to bank CDs. And right now, 26-week treasury bills are offering 5.11% APY, which is absolutely phenomenal. This is much higher than what you can get with a 6-month CD at Ally Bank at just 3.4% APY. And even if that duration is a bit too long for you, a 4-week T-bill is already offering 4.6% APY. And that yield easily beats out what rates you can get with a Discover savings accounts. Better yet, the Federal Reserve still wants to push rates even higher, so these T-bill rates are likely to still go up. For pricing, treasury bills are sold at a discount from their face value. And let's take the most recent 52-week treasury bill as an example. Based on the purchase price, I can deposit $95.15 today. 1 year later, or 52 weeks to be exact, I'll be paid back $100. That $4.85 profit is my interest. And what's nice is that I don't have to pay any state or local income taxes on this interest. Now, if you wanted to put more money in, you absolutely can. For example, I could deposit $9,515 today and get $10,000 back next year. There is a cap of $10 million per treasury bill, but for 99% of us, I don't think that will be a problem. Either way, that pretty much covers up the basics, so let's now talk about how to buy these treasury bills. If you want to buy treasuries through the US government directly, that is done through Treasury Direct. You'll know you're on the right website if there's a .gov in the URL and you see this banner saying official website. To create an account, you can select Open a New Account. The setup process is pretty easy. You'll need your social security number, bank information, and an email contact. It takes about 10 minutes, so no big deal. And once you're done setting up your account, you can then log in. Here, you can buy treasuries and I-bonds from the US government directly. To purchase T-bills, head to the upper left-hand corner and select Buy Direct. Select Bills under Marketable Securities and click Submit. Here, you'll see the durations offered by the US Treasury with their auction and issue dates. The auction date is when the US Treasury announces the interest rate, and the issue date is when your bank account is debited and you are issued an official Treasury bill. Treasury bills are generally sold once a week, but you do have to buy them in advance. For example, I'm recording on February 23rd, but the earliest 4-week T-bill are auctioned on March 2nd and issued on the 7th. So although the 4-week duration starts on March 7th, I'm not earning any interest between today and March 7. So unfortunately, you do need to do a little bit of planning to make sure that money is available when you need it and which interest rate is worth the duration. Either way, select the product and the issue date that works best for you. Next up is how much you want to purchase. For any beginners, the minimum deposit is as little as $100. Source of the funds is which bank account you want to debit. Finally, we can schedule for reinvestment. Let's say that we won't need the money anytime soon. We can then have it automatically reinvested into the same type of T-bill for up to 2 years. And this is pretty advantageous because we won't need to wait up that extra week each time, and you can earn a little bit more interest. Of course, if that's not what you want, you can select no, and that $100 is automatically paid to the account of your choosing on the maturity date. And once you're happy, click on submit. Review the terms, and you're done. You're all set to earn 4.6 to over 5% APY risk-free on your cash. And the second popular method is to buy treasuries through your favorite broker. Your money is still protected by the US government, but you have that added flexibility of trading T-bills on the secondary market. So if you have an emergency and you need cash ASAP, you can easily sell your T-bill before the maturity date. You can't do that with Treasury Direct because your money is locked up. The downside with brokered T-bills is that there are higher minimum deposits and more fees if you want to sell it early, typically at a $1 fee per $1,000 T-bill. That said, all full-service brokers offer the ability to buy treasuries. We'll keep this video simple, so I'll just show you how to buy T-bills on Fidelity. Up top, hover over to News and Research. Next, select Fixed Income, Bonds, and CDs. Here, you'll find all of the options offered at Fidelity. For Treasury bills, they're under US Treasuries. And for this video, we'll choose 6-month T-bills since they're offering over 5% APY. And here we can find a list of treasuries that are maturing in about 6 months. There's a lot of information presented, but if you want to learn more about the details, definitely check out my more dedicated video linked in the description. Arguably, the two most important columns are the maturity date and the yield to worst, otherwise known as APY or the annualized return. The top treasury bill has a maturity date of August 24th, 2023 and yields up to 5.07% APY. So if that looks good to you, press buy. Treasuries are sold in $1,000 increments when you buy through a broker. Generally speaking, if you deposit more money, you'll get a better rate. For a detailed breakdown on what yield you get per $1,000 deposited, you can select more quotes. Either way, we can choose how many bonds we'd like to purchase, where one bond equals a $1,000 T-bill. If that yield looks good to you, we can then select Preview Order. We'll confirm the purchase price and the effective yield. If that works for you, click on Place Order, and then we're all done. We're all set to earn over 5% APY on our cash. As always, I'd love to know your thoughts and whether you're buying in at these incredible rates. Have a great rest of your day, and I'll see you in the next one. Take care.